Hello everybody, my name is Lush Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record a video per week, so make sure you ring the notification bell to get notified each time one comes out. I received a question on YouTube that says, what is the chance of you doing a video on either TikTok or YouTube on where is a good investing opportunity? I just randomly asked AI Bing this question. It came back with Singapore, UK, Taiwan, India, and Indonesia. I am guessing these are emerging markets. If possible, in your video, could you show whether they are ETFs or index funds? I have some cash that I would like to invest that isn't needed in approximately 10 years. So let me address the question first and try to answer it and then state the investment opportunities I see. So firstly, India and Indonesia are emerging markets. The first three are quite developed, however. Taiwan has Taiwan Semiconductors, the biggest chip maker on the planet, and the US will go to war if China invades Taiwan to protect the chips. I mean, democracy over sovereign state. I don't quite know what the question means by whether they are ETFs or index funds. An ETF can follow an index or be actively managed so as to pick stocks. Index funds are typically used to refer to mutual funds that follow an index. If you want to invest in India, something like XID, which I just Googled and do not own, is the way to go since neither you nor I have enough knowledge and ability to research to pick individual stocks in India. By the way, since China is having quote-unquote issues, even after their lackluster attempt at stimulus and bringing their economy and real estate out of a funk, India seems to be a popular destination for investment these days, especially since India's population is still growing. You can find individual ETFs for each of the countries and markets you mentioned, of course. So let me state my investing themes, sectors, and geographical locations for 2025 and investing beyond 2025. Let's look at investing themes first. Number one is artificial intelligence. So this consists of AI infrastructure, where you have companies investing in AI infrastructure such as powerful chips and models are laying the groundwork for increased adoption. In a lot of the quote, the next best thing involving computers and technology, it is infrastructure, hardware, and data centers, i.e. the picks and shovels, that make money. And when the next best thing doesn't pan out, think metaverse, no one is able to make money off of the idea, but there was money made off of the hardware that was sold for the idea. Next, we have AI applications. AI is driving innovation across various industries, from healthcare to finance, creating new investment opportunities. The trick here is to pick the right industry, where the end users of AI see an increase in productivity, efficiency, and the company was able to save some money using AI, usually by reducing employee headcount. The next investing theme is geopolitics. So let's look at some political changes. Major political changes in economic policies will impact investment decisions. The ongoing Russo-Ukrainian war, the conflict in the Middle East that may be drawing in bigger countries, and China's ongoing desire to expand its influence give opportunities to arms manufacturers, for example. China, which is on a low ebb right now, but if its stimulus plan is improved and works, could do quite well. We have some regional opportunities. So regions with favorable policy environments such as Europe and the UK may offer better risk-adjusted returns. The next big environmental theme is sustainability. So we have transition finance. Financing the transition to more sustainable operations in high emission sectors like energy and heavy industry will take time to come to fruition, but could be world leading and very profitable. Part of that is climate adaptation. So investments in climate adaptation and natural capital allocations are becoming increasingly important. Renewable energy sources and hardware manufacturing for these renewable energy sources can be rewarding if the right investments are chosen. Implementing and installing the hardware is also an opportunity, but everything may be dependent on government subsidies. A part of the ongoing changes is the debate about nuclear. This energy source has recently come into focus as it is an on-site power source for data centers. But as much energy as data centers use, it is 1% of the total energy use, with the largest US data center using about 80,000 homes worth, and others use 20 to 30,000 homes worth. The new nuclear power has so far been only for data center use only, and not the general grid. The fourth investing theme I see for 2025 is private market investments. So there is a new access to private markets. Expanding access to private market investments allows investors to diversify their portfolio and tap into high growth potential, which Canadian and American pension funds have been using for years. An example of this is the new investment that Wealthsimple has, which is a vanilla version of private markets. We also have venture capital, where you have increased investment in promising AI startups and mega deals involving unicorn companies. These are high risk, high reward. The fifth theme is energy transition, which we covered a tiny bit. So first we have clean energy. The shift to a low carbon economy is driving demand for renewable energy, electric vehicles, and energy efficient technologies. Raw materials such as copper, lithium, and others are also needed, but you'll note from this diagram that copper is used in almost everything since it conducts electricity, yet lithium is just used in batteries and fuel cells. Part of the energy transition is sustainable operations, so supporting businesses in their decarbonization efforts can align with climate goals and create long-term value. Consulting companies can do very well in these implementations. Now let's look at some sectors. This is the second dimension of what to invest in 2025. So the first sector we can look at is technology. So that will be, again, AI and machine learning. As I mentioned, companies leveraging AI and machine learning for innovation are likely to see significant returns, but are not seeing them right now. Cybersecurity is another part of technology. As digital threats evolve, both from private and nationally sponsored hackers, cybersecurity firms are becoming increasingly vital. The second sector would be healthcare. So we have medical innovations such as biotechnology and medical innovations being poised for significant growth. Things like gene editing, nearly forgotten from about a half a decade ago, has worked on in the background and is yet again coming to the surface by being practical and helpful in medicine. Healthcare technology such as telemedicine, personalized medicine, and AI-driven diagnostics are revolutionizing healthcare. The third sector is energy. So we're looking at renewable energy, where companies in solar, wind, and other clean energy sectors are expected to grow as the global push for sustainability continues, as discussed earlier. Because of China's lead, low-cost production, and let's face it, government subsidies for the solar companies and others, it is hard to invest in solar anywhere else. And energy efficient technologies is another opportunity where investments in energy efficient technologies are promising. The fourth sector is industrials. So we're looking at infrastructure, with companies involved in infrastructure manufacturing and home building are likely to benefit from policy tailwinds and structural changes, and especially from lower interest rates. And industrial growth is where the industrial sector is expected to see healthy growth in 2025. The fifth sector is just basic materials, with mining and construction materials, where companies in basic materials sector are expected to see growth as the global economy continues to recover. Sustainable materials investments can align with environmental goals and be profitable as that is prioritized. The sixth and final sector of opportunity in 2025 is financial services. We're looking at private credit, which offers investors a rich pipeline of income-generating opportunities the world over, and emerging market debt. Specifically, diversifying into emerging market debt can provide attractive returns due to the higher interest rates, but there is, of course, also a ramped-up risk. And finally, the third dimension of the opportunities for 2025 is by country. So here are some countries that are expected to be attractive investment destinations in 2025, looking at the fastest growing countries, emerging markets, developed markets, and then other notables. So looking at fastest growing economies first, number one is South Sudan, which is expected to grow 27.2% in 2025 due to post-conflict reconstruction. The Foreign Direct Investment FDI fund, it has inflows which peaked at 122 million US dollars in 2022. Most FDI is concentrated in the oil and gas sectors in the South Sudan, with investment also in agriculture, mining, and infrastructure. The top investors in South Sudan are China, Malaysia, India, and Uganda. Looking at some of the challenges for South Sudan is political instability, corruption, and underdeveloped infrastructure, with the latter, of course, also being an opportunity. The second fastest growing country is Guyana, forecasted to grow at 14.4% in 2025 thanks to an oil and gas boom. Looking at their economic growth, Guyana is one of the fastest growing economies globally, with a GDP growth rate of 33% in 2023. The key sectors in Guyana are oil and gas, agriculture, tourism, and manufacturing. And investment incentives are tax and fiscal incentives for investors, especially in agriculture, energy, and manufacturing. The third fastest growing is Palau, which is expected to grow at 8.5% due to a recovery in construction activity and international tourism. The FDI flows accounted for 58 million US in 2022. Key sectors would be tourism and real estate. The investment climate is such that the government is working to make the country more attractive to foreign investors by revising the FDI regime. Next, let's look at emerging markets and some countries of interest there. So number one is Vietnam, with a projected growth rate of 5.3%. Vietnam continues to attract foreign investment due to its stable economic policies and growing manufacturing sector. Vietnam's economic growth has been increasing rapidly with a strong manufacturing sector. Key sectors are electronics, textiles, footwear, that would be the manufacturing, and agriculture. Now, the investment incentives are various tax incentives and a stable, although communist, political environment. Your investments could suddenly become nationalized, so something to keep in mind. The second emerging market to look at is India, which is expected to grow at 6.9%. India remains a strong investment destination with its large and growing consumer market. Demographics are definitely on India's side. India is one of the fastest growing major economies in the world, so economic growth is second to none. Key sectors in India are information technology, pharmaceuticals, textiles, and automotive, so technologically advanced. Looking at investment incentives, the liberalized FDI policies and a large domestic market definitely makes it such that India is a good place to invest. Our third emerging market is Mexico, projected to grow by 1.4%. Mexico benefits from its proximity to the US and trade agreements and is generally considered quote unquote friendshoring for the US. The economic growth in Mexico is benefited by a diverse economy with strong manufacturing and export sectors. The key sectors are automotive, aerospace, electronics, and of course tourism. The investment incentives in Mexico are free trade agreements and just the proximity to the US markets. Turning now to developed economies, number one is the United States, with a projected growth rate of 2.7% in 2025. The US remains a stable and attractive investment destination, especially in sectors like technology and real estate. The US has a highly developed and diverse economy, so economic growth is benefited by that. The key sectors are technology, finance, healthcare, and consumer goods. Investment incentives include strong legal framework, the rule of law, and access to a large consumer market with a large population and a high demand for consumer goods. The second developed market is Canada. It's expected to grow steadily, and Canada offers a stable investment environment with opportunities in natural resources and technology. For the US, Canada is also friendshoring without the border wall. Canada has a stable and diversified economy, so decent economic growth. The key sectors are natural resources, manufacturing, and technology. And the investment incentives are favorable business environment and strong trade agreements with the US especially, but the rest of the world as well. Now let's turn to other notable countries. Number one is China. Despite a slower growth rate of 4.7% in 2025 being projected, China remains a significant player in the global economy with opportunities in various sectors. Instead of the high single-digit growth rate of yesteryear, 4 to 5% is all one can expect these days. The one-child policy has created some oddities in China's demographics, capping growth and actually decreasing the population. China is arguably no longer an emerging market, and its population is becoming middle class, being pulled out of poverty. China is the world's second largest economy behind the US. It was predicted some time ago China's GDP would surpass the US, but that doesn't seem likely now. The key economic sectors are manufacturing, technology, and infrastructure. And the investment incentives are large domestic market and selective government support for foreign investment, possibly with strings attached, however. The 1.4 billion people have access only to the Chinese government's allowed internet. And the second country of interest is Brazil, with a steady growth of 3%. Brazil offers investment opportunities in agriculture, mining, and infrastructure. For economic growth, Brazil has a large and diverse economy. It is a very large country. Key sectors include agriculture, mining, and manufacturing. And the investment incentives are natural resource wealth and a growing middle class. So these countries present diverse opportunities for investors depending on the investor's risk tolerance and investment goals. These are then some of the investing themes for 2025 that I see, and going beyond as well as looking at sectors and countries. I hope you can find something to your liking. If you have any requests on what you'd like me to cover in future videos, please put that in the comment section. If you'd like to get in touch, please reach out on any of these social media channels, and may have a profitable day.